In the center of all of the action, Terry, what have the volumes been like for all these products that you have there? Commodities, rates, oil prices in particular. What does it look like from your vantage point?
Well, Sarah, I think you have been talking about this as many of your guests have over the last several weeks. I mean, the prices are all over the place. The volumes are associated with it. You get ebbs and flows in the spike of volumes going up and down depending on which way the market's going at any given moment in time. We're all interdependent on all these geopolitical factors that are playing into it. You talked a moment ago just about, the commodity markets. Let's talk about a second about wheat. I mean, you look at a third of the wheat production, the world's production is coming out of two countries that are at war with each other right now. So if that comes off the market for this year, next year, and maybe even the year after, I'm not suggesting it will, but if it does, where is the market going to go? I mean, we're not just talking about people shooting each other, which is catastrophic in itself. We're not talking about a financial collapse. We're talking about hunger here. And this is a big issue for us. So risk management associated with these products is critically important.
What about liquidity? Has that been an issue?
People have talked a lot about the liquidity. The liquidity can be an issue in times of stress no matter what market you're trading. If you're trading an IBM stock or if you're trading a wheat contract, it all depends on what's going on. Liquidity comes and goes, as you know. People don't stand in front of freight trains because it's fun. So there's a lot of stress in the market system. There's so much uncertainty. There's things that we've never seen before. There's so many people that are trading the markets that have never seen inflation. We're inflation's for the first time in 40-plus years. People have never seen a downtick in the equity markets that are participating. So people have not seen an on-the-ground, boots-on-the-ground European war. So how do they participate in that? And in return, the reflection of liquidity is associated with it, Sarah. So it's not a surprise to me. I've been doing this for a long time, and people pull back during the unknown times that we've seen.
I don't know if you can hear. There's a birthday going on here on the floor for one of the traders.
I can hear the birthday. Is it yours? Is that yours?
It's not for me. No, mine's in August. Terry, what about margin? Are you requiring traders put up more for trading futures in these commodities, given all the action we're seeing?
We don't put it up just because of, at will. I think that's really an important factor here. There are calculations that go into our risk protocols that we've been doing for years to protect the system. So, yes, margins go up and down depending on the risk associated with it, and we have not deviated from that strategy. CME is a neutral party, a neutral facilitator of risk. We don't have a stake in the game as far as the market goes up or down. So margins are associated with the risk of the product, Sarah.
Because we've heard about this happening and some potential pain out there. Trafigura having to raise more funding. Do you expect any commodity shops to blow up as a result of some of these crazy one-way price moves?
Well, I mean, Sarah, that's speculation at best on my part, and I wouldn't go there. So I have no idea. All I know is that, the system that I'm running here is highly capitalized. I'm sitting on $150 billion of client cash, sitting on a massive default fund that we've had for years here at CME Group. We manage the risk appropriately, and that's our job, and that's what we're trying to do. Now, people come and go, as you've seen throughout the years. We saw it in 08. We never thought we'd see banks fail, but they did. So I'm not suggesting they will, and I'm not suggesting they won't. I don't know.